Yo, what's up traders? Welcome to a new video. So in this video, I'll be going over how to analyze Forex market trends using technical indicators. So what I am going to cover in this video, quite simple, 4 technical indicators. And I'll be showing you those indicators on TradingView. So let's go to the charts. Okay, so now I'm looking at the DAX index. I could use any random Forex chart. Let me pick, for example, New Zealand CHF. Alright, so this is the New Zealand CHF. The first indicator that I am going to cover is the Bollinger Bands. Quite popular. And let me go to the settings of the indicator. We have the basis, we have the upper, and we have the lower band. And these are the default settings. The length is 20, basis, moving average type is the simple moving average, and standard deviation is set at 2. So yeah, these are the basic settings, and I think that you're familiar with this indicator. If not, basically what it does is that this indicator shows breakouts, and it also identifies volatility in the market. So over here we have a range, right? So we also see that the band is not expanding or whatever until we reach this point, and we see that the bands become bigger, and then we also see that the bars become bigger as well, the candlesticks. So that is the purpose, and that is also what makes this indicator useful, is that you do not trade when there's a range, right? But if a trend starts to appear, for example over here we see that the bands become bigger, wider, basically is the right term, and over here we have a really wide band if you compare it over here to this part, right? So it's really easy to identify a trend, because over here we see a really wide band, and we also see that the blue line is pointing downwards. So as you can see, price is also going to the downside, and we also see the same happening over here. The blue line is still pointing downwards, and we see price also goes to the downside until over here we see a small pullback. The blue line crosses to the upside, and we see that the candlesticks try to break out the upper band, right? So this is a nice trending indicator. This is the first one. Let me show you the second one. First I delete this, and I look for the envelope. We click on that, and then we play around with the settings. We have the length is set at 20%, is 10. You can also click on exponential if you want exponential moving averages, because that's basically what it is. And here we have the basis, the upper and the lower, and the background is this color. Yeah, this is just default, and you can play around with that. For this strategy I used a length of 14, and the percentage is 0.1. So this is what the majority of the people use. Let's zoom in a little bit. Okay, so the first thing that you see is that it seems like it's similar to the Bollinger Band, right? However, the Bollinger Band, they use the volatility more than just the envelope. The envelope basically shows you more like moving averages, and also they have a band, but they don't include the volatility of the market. So if there's a ranging period, we don't see really small bands. For example here, they're still wide, right? So how do you use this indicator? If we see the bands pointing upwards, and we also see the middle line pointing upwards, then we're in an uptrend. Here we see that from this point over here, we see that it goes from pointing upwards pointing downwards, and we also see the blue lines crossing to the downside, and from that moment you can tell that we do not go up anymore and we're in a bearish market. So we see price also goes down and down and down until about here we see that it goes up. We see also price goes to the upside, and then we see, I believe this is, no, it's not news, but it's just the end of the day, and a new day starts, new trading day. But how you can trade this, of course, as I mentioned, you can just look at the lines, the bands of the envelope indicator. If it points downwards, you can just take sell trades, but you can also scalp when price crosses the band over here. You can just take a quick scalp, and for example, a few pips over here. These are just 2 pips, so it's, in this case, it's not really a great example, but it's something you can do as well. Over here we see also that it crosses, it comes out of, it goes out of the band, few pips scalp, and then it goes back. Or what you can also do is just when it is out of the band, you can then take the sell trade, right? So it's more like a reversal indicator. So over here it's out of the band, and then for example when it stays out of the band here, you can take a sell a few pips down, right? And let me see, over here it goes out of the band, so you can either take a sell or a buy once it is out of the band. Then over here when it's in the band, you can take a buy. However, in this case it was a loss because price went even more down. It's just entirely up to you how you use this indicator, but it shows you a trend, right? Over here we see a nice trend to the upside, everything's pointing upwards. So yeah, you can use this indicator for identifying the trend. All right, we go to the next indicator. This indicator is personally one of my favorite. Is the moving average, and let me grab this one. I believe most institutions, they use the simple, and the hedge funds, they use the simple. You can also use the exponential. Personally, I use the exponential moving average. And what we do over here, let's say we use the 50, right? And what it does, it calculates the average of the last 50 bars. So for example, okay, blue line is good, and click on OK. What you can do to identify the trend, if this moving average is pointing upwards, then you only look for buy opportunities, right? And we also see that's in an uptrend. If price is also above the 50 moving average, and we also see that it's pointing upwards, the blue line, then we're in even a better trending bullish market, right? So that's another confluence for you to take buy opportunities. So over here we see prices above the 50 moving average, and we also see that it's moving upwards, so we only take buy trades until over here it crosses. We see from this moment it is pointing downwards, so here we take sell orders, and price also below the moving average, so we take sell until here. Over here we see that now it's flat. From this moment price is above. We also see that it goes to the upside a little bit. Again, here we have the a new day, and so that could be end up in a loss if you put your stop loss, let's say here, but if it's here then it's not a loss. But this is also a nice indicator that shows you the trend. And as mentioned, big hedge funds and institutional traders, they use the moving average. They're a fan of the moving average, and there are basically 3 popular moving averages. Let me show you this indicator. It's basically one indicator that enables you to use multiple moving averages in the same chart. So popular moving average indicators, the size of the moving average is the 20, the 50, and the 200. The 100 is also being used by many traders, but these are one of the most popular numbers. In this case, I use the exponential moving average, but you can also use the simple moving average or the weighted or the whole. It's entirely up to you, but these two are the most popular ones. And okay, so at the moment I have selected the 50, the 200 and the 800. So what you can do, it's really simple. When price is above these levels, so let's say here for example, price is above the 200, the black line, the 800 and the 50, we look for buy opportunities. We only take buy trades, we don't take any sell trades, right? So in this case, price keeps going up, so that would be a win if you, let's say, take a buy here. Then price goes down, we don't do anything, we wait for price to cross the 50 and we take a buy trade again. Goes down and we take a buy trade again, right? Until, let me see, for a situation about here, price is below, where price is below the 50, the 200 and the 800. Again here also below the 50, the 200 and the 800. And from that moment we also see the 50 is pointing downwards, so we only look for sell opportunities, right? So that's a nice sell trade. For example here, these are about 26, 25 pips, which is nice. Creates a nice pullback. We wait for price to again, and now it was a little bit above the 50. We wait for it to go, price goes down and it crosses the 50 to the downside. From this moment, again, a nice sell trade. So the moving average is also one of the better indicators in my opinion to identify a trend. Then we go to the last one, and this is the parabolic SCR. SCR stands for stop and reverse. So we see over here a few dots, not a few, many I believe. All right, so we see many dots, and basically what it does, if a dot is above the candlestick, then we are looking for sell opportunities. If a dot is under a candlestick, then we look for buy opportunities. So in this case, we see many dots above the candlesticks. Let me play around with the settings a little bit. These are the default settings, but let me make it a little bit bigger. This too big, but okay, this okay. And we have the cross, but we can also use circles. I prefer circles. Okay, yeah, okay. So, and this is a really nice trade, because what you can do over here, let's say that from this candle you take a sell, because this is the first dot. We go down and we close a trade once the bullish dot appears, because the dot over here is below the candle. Yeah, the candle. So from this moment we take a sell here, and we just can trail our stop loss over here. Every single dot we trail our stop loss to here, and we made about 33.5, let's say 34 pips or 33 pips. And that's basically a nice way, this indicator is a nice way to identify trends. And you can use this indicator if, let's say, on a higher time frame you also see that we're in a downtrend, for example, because it's not that good in a range, because over here we see a dot on the upper side of the candle, which means that we take sell trades. But we also see over here that another blue dot appears below the candle. So let's say over here candle closes, you take a sell, but now we see also that the blue dot appears, so we also close, right? So there was, you basically break even, you didn't make any money. And over here we also see that in the ranging market this is a sell, but over here we see that the blue dot appears, so that is a loss of almost 3 pips. So in a ranging market this is not good, and that's why I mention that this is a really great trending indicator, because you should use this indicator if you are in a trending market, right? Over here, let's say that we're in an uptrend on the higher time frame, because we're looking at the 5-minute. Every time when you see that this blue dot below the candlestick appears, you take a buy trade, right? So over here, this was a buy. So there was a few pips scalping, but again, our stop loss didn't get hit because it was here. So let's say that we trail it, there was a loss. So of course you can trail your stop loss. However, what you also can do is to just trail your stop loss and place it on the lowest low, for example here. And let's say over here you take a buy, then you place your stop loss about here, and you just keep it there until you have reached your profit. And then over here, this was a nice buy, it didn't reach the stop loss. Here there was a nice buy, you can place it here and you can leave it until you made, let's say, 5 pips. So you can use the trailing stop loss on the blue dots. However, personally I wouldn't recommend that. I would just go for the, let's say, 5 pips or 10 pips if you're scalping. So yeah, this is a nice trending indicator. So we have covered the Bollinger Bands, the envelopes, the moving average, and the parabolic SCR for identifying trending markets. So if you like this video, give it a thumbs up, subscribe, and see you in the next video.